Hi everyone, Adam here from Future Set Mortgage Broking. Hope you're doing well. It's a property finance insights where we deep dive a little bit more into a topic of choice. And today we're talking about banks valuations versus real estate valuations. So you may have wondered why your lender will give you one value for your property while a real estate agent has said something completely different. Now, how do you know the real value of property when everyone is giving you different quotes? So the difference in the two valuations is due to the lender and the agent assessing different aspects of the property's value. The lender is looking at how much to comfortably lend you in relation to the cost of the property, while the agent is looking for the best sale price. The property's market value is the estimated amount for which the property should fetch on the date of valuation, assuming a buyer and seller were to enter willingly into a sales transaction. The bank valuation is the amount that the lender is prepared to lend against the property, so against the security. The bank or lender appoints a valuer to independently verify the value of the property. As the property is the asset providing the security for the loan, the bank valuation generally tends to be more subjective and conservative to protect the lender financially in case you cannot pay your mortgage and the property must be sold to cover your debt. While the bank valuation is based on extensive research into comparable properties, it will be lowered when the buyer is borrowing more. This is a way for the bank to balance its risk. The bank's valuer can potentially be held liable if the bank suffers financial loss, so they prefer to make a safer, more conservative estimate in most cases. The valuer can also advise the bank to refuse the finance application if they believe the buyer has paid too much for the property. If you are dissatisfied with the bank valuation of your chosen property, you have two options basically. You can request a reassessment of the valuation, or you cancel your finance application and start again with another lender. The bank will only do a reassessment if you can provide evidence that the comparable properties reflect a higher value from the valuation. You should also check that the market valuation reflects the true market price of a comparable property, as you may find that the seller has overpriced the property. You can hire an independent valuation company to make a market valuation of that property at your choice. The market opinion is assessed by a real estate agent and establishes the asking price for the home. The agent has a different agenda than the bank's representatives, something always to keep in mind. They want to value the property to achieve the highest possible price in the sale. However, they do not need to work realistically within those parameters of recent sales and real estate activity in the area. The vendor can receive valuations from several agents when deciding which agent to appoint to sell the property. Whether you're buying or selling a property, it's always recommended to seek and get independent advice about your property and the valuations that are going to be potentially used. Again, a good mortgage broker can do a sort of a sense check on the valuation, and again, just do your own research as well, because it will make a difference in the long term. If you have any questions around this subject, valuations, how banks do their valuations, things to consider, what are the pitfalls if the valuation comes in too low, what happens in that case, again, I'm more than happy to chat to you in more detail. Please feel free to click the link below or button below, book a time with myself for a chat. In the meantime, take care, stay safe, and I'll speak to you again soon.